Good morning, good evening, good afternoon, wherever you may be in the world. I'm Shane Verneres, Nick Quinn. We're back for the U.S. Open. Pretty much, a little bit going on during the overnight, Nick. It's not quite the volatility that we've seen. There was something key that just came out of the ECB, published account of their monetary minutes, I believe. What did you glean off of that report? Well, that'll certainly bring parity back into question, and we'll be trading that level yet again. I mean, it feels like just as soon as you can get away from that big round number, you're going to go right back to it. I sort of concur here, at least from a technical standpoint. I look at my daily; we're still fairly bullish here, even though we saw really a big pullback yesterday. Still in fairly bullish territory on the daily. I would say my biggest concern, and it's fascinating that we see a hawkish stance out of the ECB, but then we come right in and we see a release from the BOE, and not but a few minutes ago, talking about just how stressed the liquidity in that pension system in the UK was. For me, that screams of 2008. It screams of structural issues facing really what could spill into a global liquidity crunch. We've suspected something like that could happen as we unravel the unlimited QE and really the unprecedented COVID-19 shutdowns. But as we start to see more stories, Credit Suisse, BOE stress, I'm fascinated to see how Q4 plays out. That's a long way of me saying, I think moving forward, there's a tremendous amount of uncertainty in everything from the British pound to crude oil. Too big to fail. We were just talking about that a second ago. Too big to fail. I mean, for those of us that have been around the block a few times, we start to see the start to see intervention to really hold up folks that are highly leveraged into your financial markets. I'm all of a sudden, I'm watching the California pensions here in the United States. I'm watching CalPERS and CalSTRS, two of the largest pension funds in the world. If they find themselves underwater, essentially getting margin calls, we could easily see some intervention in the United States in the same fashion. It makes you wonder what happened in Japan. It really does. And we're curious if they pull back some of that curtain and say, okay, we had to intervene and take all those yen off the market to prop up our value. What was really going on here? So I think that as we move forward, we're going to find out an awful lot about this stuff. One of the things that I was looking at today, just a quick look at the U.S. dollar here. We've got about a half point gain here in the dollar index. Was those jobless claims? The weekly jobless claims just dropped about 25 minutes ago or so. That about an hour ago. I'm not real big on these weekly numbers. Not since COVID, when we were all wondering what the situation was. I don't believe they're huge market movers. That being said, with NFP on deck tomorrow, I think today's numbers are fairly important. We're trying to figure out exactly where tomorrow's number may come in. And these weekly numbers, I mean, they didn't look good, Nick. I mean, continuing jobless claims come up. They come in 1.361 million. That's well above expectations of 1.345. You're looking at initial jobless claims, which really is the big one. That's the new folks headed to the jobless rolls, 219,000, above 203,000 expected, above 190,000 previous. That's a pretty formidable uptick right there. I mean, what do you see on the open? Is that going to give us a little bit of a bullish action or bearish action in equities? Let's give it a shot. Check, check. Nothing, huh? Okay, well, technical difficulties. 1 second. Give me 1 second, see if we can remedy this. Okay, everybody. Technical difficulties, I guess, cannot be avoided. It's been one of those weeks. We had some issues with the audio, but the video is working today. So my apologies again. A few things that I would look at here for the equities open. Essentially, what Nick was saying was our initial jobless claims numbers were going to be, potentially a bullish market driver. The idea here is that as those unemployment rolls rise, and you do see really some stress on that economy from the hawkish policy, we may be in a position to see bullish price action in the U.S. equities. Why? Because the Fed may be inclined to back off of their rate hikes. So that's what's one way to read it. We're going to be back in the saddle for you tomorrow with NFP, and we'll see exactly what these numbers are going to say. Just a few things to watch on the U.S. Open. You've got a few levels out there. You've got one in the pound. You see the pound dollar coming off nicely. You've got about 111, 111.25 down there. I think that's a decent level. I would keep a close eye on that. Another pick, an interesting market right now is natural gas. We've been going on and on about natural gas not getting any sort of bullish traction. Finally, we're starting to see it this week. So coming off of a large losing streak of about 4 or 5 weeks now, you've got that 75 level that's right up there. It's looming large. I have a close eye on that one. As far as U.S. equities go on the open, I would be a little bit, I don't know if I'd be hesitant to dive into these markets. This sort of looks like a chop sideways type of a day. And what we have really in our overnight futures markets is a flat market up about or down about 1/4% across the board for your E-mini Dow, your E-mini Nasdaq, and your E-mini S&P 500. As far as making an early commitment on this trading day, I would be very careful with NFP, just sort of lingering. And there's your open, slightly negative. So for now, once again, we apologize for the technical issues. We'll do our best to get them rectified. We were confident that we had those rectified today. Apparently not. Few things we need to go over real quick. U.S. non-farm payrolls tomorrow. Be sure to tune in, and we'll be back after that. Mantis Live, the third installment, coming up later this evening for us in the United States. Going to be during that Australian session, bright and early in the morning. And then we've also got the new Academy, Phase 1. We've got a lot of feedback on the new Academy. It's a fantastic tool. A lot of effort, a lot of work went into this, and I absolutely love the psychology section. Nice bite size. You can digest this information. You don't have to spend all day trying to figure out what exactly somebody said. You can go back and watch it quickly and really digest it and get into the deep aspects of really what it is to be a trader from a psychological standpoint. Fantastic learning material. Be sure to get started there. We have a few traders now trading funded. It's fantastic. It's a good opportunity, a way for you to build a career in the marketplace. So if you haven't already checked out our funded trader program, check it out. If you haven't checked out the Academy, check it out. And we'll be back with you tomorrow with NFP. And don't miss Mantis Live tonight. So in any case, I do appreciate your patience with the technical issues. It seems like if it's not one thing, it's another, but we're doing our best to get this rectified behind the scenes. As always, trade well, and we'll talk soon. See you.